Hey guys and gals, it is Mark Coe for the 10th of October. Wanted to look at markets today. Big sell-off in stocks, big sell-off in S&Ps. So not a lot of joy for anybody trying to buy the S&Ps. But what I wanted to focus on, kind of this difference between laying out your framework, bigger picture levels, and what you want to be thinking of. And so I wanted to use crude oil as an example. So crude oil was a market yesterday. I made a video on, and we were talking about some of the trade setups, and they weren't monster trades yesterday. But again, I want to talk about the same level. I did the same video yesterday, and I talked about the 75.05 level, and I talked about short-term trade into it. But really the focus is, why am I looking at this level? And again, all the activity that's occurring in and around the 75. Above it, buyers have served to move it higher. Below it, they've offered it lower. Right? So what we're really trying to do is dial in on this zone and understand what's happening at this level. Right? This is the area, and it's been diagnosed for several days. So this is just the top edge of that. And so all I'm using and looking at that top edge is the most recent activity up to it. So we had a visit yesterday that traded as high as 28, and then coming back to the 5th of October, traded up to 22, and I'm simply marking that edge. But I've been operating for the last couple days with this sell side bias in place, which means I'm only looking to sell top edges, looking at sell counts on faster moving charts. So the direction has been clear. And the difference is, so this is just a 4-hour look. The difference is what the short term, what the momentum players looking at. They're looking at a day like yesterday, and it was a big rally for $1 off the bottom, but they're looking at it and getting sucked into it and thinking there's a lot of strength up here, right? So this is yesterday's trade. I talked about this. Talked about waiting and being patient. Again, from where? From the level, right? Right up here near 75. So there were two opportunities yesterday. And again, they were not massive, but they were about $600 in short-term trades. That's 60 ticks per contract, short-term stuff. That's what was there on a sell signal with the sell bias. So now think about it from today's standpoint. You start to get this massive move, $2 lower. Well, that's a couple $1,000s per contract. But the difference is, it didn't come out today, right? That level has been there for days. So you're talking, 20s all the way down to like 95s as your zone, right? That's your zone. It got above there. Yes, it didn't close above there. It didn't manage any magnificent movement above there. And the answer was the same. Again, going all the way back to this rally on the 5th of October, right? That's really highlighting the last spot in there, right? And that's where I'm pulling that high from. So it's the high, and it's just wrapped into this little zone, and that's all I'm doing. So I don't care whether you're looking at it on a 5-minute, a 10-minute. What you're doing is pulling different time frames to understand the same picture, which is that when trade occurs into that zone, the market is selling it, and only above that is making you incorrect, right? So here's an hour look, 1-hour chart, exact same market, crude oil, right? This is all you're doing. You're just dialing in on the spot of chart. And so the difference is you're focusing on edges. You're focusing on edges. There's now some bottom edge material down here, isn't there? Look, bottom edge, right? Look, bottom edge. Where's the market having trouble extending through? It's because it's at that bottom edge. What did the market do? Bought it up, bought it up. You're now visiting the exact same spot. This market rallied from 72.90 to 73.60. That's a 70-cent rally. But where did it rally from? That bottom edge, right? That bottom edge. It was the same signal, or let's say the same type of heads up, which means you're trading at an edge. That's how you're able to see 60 ticks of movement in this, which looks like total sideways action, right? So today, I would tell you on the short term, you didn't have rally into the top of it, not U.S. session. You had it earlier in the day. But again, that's the move. And so the difference is the short-term trader, their choices are stick out of this and wait for a rally, which never occurred, or trade earlier in the day. But if it's already started by the time you're starting trading, it is what it is. It's moving. The difference is the person with more kind of analysis from a bigger picture understands the levels, and all that's happening is the market is working this level for a period of days. The resulting answer was the same, which was price lower from that level. It just didn't happen in 5 minutes. right? And that's the difference between the short-term trader and somebody that will look, or I say short-term, maybe it's even a scalping mentality, right? It doesn't mean that there aren't days where momentum will occur. Absolutely. We saw momentum today. But from a standpoint of being able to lay out levels, that's really what you want to be thinking about. How do I continuously operate at those levels? And the key being so that if you're above it, you know where you're wrong. That's the key, right? That's the key. So again, I think financial news is going to be dominated this evening by the sell-off in stocks. It's a pretty steep move. But I wanted to point that out because we're talking about the levels yesterday. We're talking about trade into that 75 area, and it took a whopping 1 day after the initial movement into it to really see a resulting move. But again, that move was sizable. It was 2 full points in crude oil. It was a $2 move in crude. This is just a look at E-minis toward the end of the day. So I hope you guys have having a good week up to Wednesday here, and look forward to more. So cheers for 10th of October here.